Let's talk about the markets today because life goes on as it always does. We're anticipating more tariffs on China. Does it happen? What's your base case?
I think we will see. I think the rhetoric's going to heat up until we actually experience some pain. And what's going on right now is the U.S. economy's got a lot of momentum because of this sugar high of the tax cut. And that gives us the ability to be tough on trade, and we don't have to worry about how it's hurting the rest of the world and hurting our exporters right now. But if the economy slows down, and it will slow down next year, as we come off the sugar high, then I think the pressure is going to be on the administration to come to trade deals. Now, I know that's what they say they're trying to do all along, and hopefully that's the case. But you can only talk tough on trade when you're working from a position of strength where the economy has really got momentum. If the economy weakens, I think the administration loses its ability to talk tough. And so ultimately, I think there will be deals rather than wars.
And as you point out in a recent note, we all know the risk of tariffs, right? This is a risk that we all can see. Yeah. We all can see a risk of a slowing economy. And you use an anecdote involving a train, which I won't get into. But the point is, it's the risk that we don't necessarily see that catches us off guard. And in your view, it could be debt. Yes,
absolutely. I mean, I think we've become one of the casualties of populist politics is we don't have a serious debate about anything. I mean, the most serious problem with populism is that it's not serious. And so if you look at how much our debt is increasing, I mean, later on this week, we're going to get a budget deficit for the month of August, the 1 month, which is going to be $200 billion for the month. For the year, it's going to be about $800 billion. Next fiscal year, it's going to be over $1 trillion. Right now, American households actually owe more money indirectly by virtue of being taxpayers than they owe directly. So you add up all the mortgages, auto loans, student loans, the whole lot, it's about $126,000 per household, but about $127,000 per household in federal debt. So we're not watching this, and we need to watch it because it's going to impoverish us in the long run. If we live beyond our means today, we will have to live beneath our means in the future, and that's what we're not focused on.
So let's have a serious discussion about that and sort of draw it to its conclusion for us, because it's also not become as much of a point of discussion, in part because it hasn't been a problem, right? Because we've had other countries that are willing to lend to us, because rates have been low. What's going to change that is going to make, besides just the size, what's going to make it more of an issue?
Well, I think the problem is that over time, as the Federal Reserve normalizes rates, then I think you're going to see, obviously, higher debt service costs, and then the next time we have a recession, that's going to make the deficit worse. I mean, the problem is this is the very best of times, and we're running a growing budget deficit. So the worst of times, suddenly this thing spirals up to close to $2 trillion per year rather than $1 trillion, and then we've got a much more serious problem. And the problem is then it's going to be excruciatingly painful to deal with it. You want to deal with these problems when you've got a growing economy, you've got the ability to raise a little bit of revenue, cut a little bit of spending, but we're really not doing it now, and that is going to be a problem down the road.